As we turn our attention over to the grain markets now, this week we were joined by author and analyst Elaine Kub. The hot and dry conditions across the Corn Belt have not seemed to have grabbed the attention as of yet by the traders. I began the conversation with Elaine by asking her about the factors that are impacting the trade.
It's wild. I mean, from day to day, prices can change 30 or 40 cents, and that makes it really difficult to make a decision when you feel like the next day you could be wrong by 30, 40 cents. And that volatility is due to a lot of different things. I mean, it is a weather market, certainly for North American row crops right now, and justifiably so. But on top of that, this is just the time of year when trading volumes, futures trading volumes tend to fall. In any given day, the daily trading volume in soybean futures is about half as much as you might see on a random day in February. So that's part of it. It allows the markets to get more wild and more choppy. That weather market, the outside markets, just everything seems to be adding to this volatility. And I realize that adds challenges to making decisions.
You talk about the fact that it is a weather market, and I've heard from a few of our viewers over the past week as they look at this, they haven't really seen the market, at least where we sit here in Nebraska, feel like it has absorbed the dryness we've seen in Nebraska. Of course, that is not a story everywhere in the country. I know you've been blessed up where you're at in South Dakota. It sounds like you've received some rain, but what do you say to those producers that are getting frustrated with this market because of that issue that they're addressing?
Absolutely true. The weather seems to be responding to whether or not it's raining in Iowa and Illinois, which is pretty common through a summer. And I think that's likely to happen again this next week. I'm sure you'll cover this in your show elsewhere in your show with Al, that there's more precipitation forecast that may or may not get to some of those really dry parts in western Nebraska, western Kansas, where I know anything that's dry land that isn't irrigated is really suffering. And even the irrigated pieces are very, very expensive to run diesel on this summer. I understand all of those challenges, but the market itself, you're right, doesn't really seem to care about that until perhaps we start to see more of those numbers show up in the weekly condition ratings. But even then, I don't think that the overall North American feed grain supply picture is going to be as tight next year as it was this past year. So if you're in one of those areas that is having a crop failure where you have to look for the market to recognize that will be in the basis eventually. Next year, that basis will reflect local supply and demand as well as transportation costs, which are going to muddy the waters as well.
Elaine, let's talk a little bit more about basis. You recently wrote on DTN about some of the challenges when it does come to basis and the cost of transporting goods from one place to another. What would you like to tell our viewers about today when it comes to basis?
Well, you have to realize, where that money is going. It's going to be very frustrating to see you not getting paid as much as we would in a normal year, and that is directly related to fuel price and transportation costs. So if you're in, again, western Nebraska, let's say, a rail market where ordinarily you'd be sending this grain westward on the rail, some of those rail freight charges, the fuel surcharge itself is adding 15 to 20 cents on the transportation costs. And that comes back out of what is being paid to farmers, and or it gets added to what must be paid by the end users. And end users don't care that our own input costs are going up. They can only afford so much, particularly when you get out into the feedlots and the panhandle of Texas, places like that where basis is extremely hot. So we get this very weird scenario, certainly in the old crop, but we'll see it also in the new crop, and we're already seeing in new crop basis bids where they really widen out the haves and the haves not get farther and farther away. You have very low or cheap or wide basis at the farm gate in some of these western areas of the Corn Belt, and yet very, very hot strong basis in areas of usage. So in some of the I states, and like I mentioned, in the panhandle of Texas.
Elaine, I think that's an important point. Of course, producers watching the show today know the price of diesel has certainly gone up, and they feel that effect every day. But they might not think about the cost of transporting goods and how that's ultimately affecting their price. And when it comes to exports and shipping commodities, are we seeing a pretty dramatic effect just because the cost to ship, for instance, from Nebraska out to the PNW has increased?
Yes, exactly so. And it shows up in our wheat market too. So technically the United States wheat is the cheapest in the world right now. But again, these higher freight rates are true not only for rail, but also for barge shipping. Those rates are up about 50% versus a year ago. Certainly also for ocean freight rates. That's also a diesel market. It's a slightly different diesel market, but the same forces prevail, and the same cost structures will add to those same challenges of getting things moved from one place to another, particularly this year when there's the sort of a lack of grain coming out of the Black Sea region because of the Russian war in Ukraine. And we would ordinarily want to see some different movements across the ocean, but that's going to be more difficult, or be able to pay less at the farm gate when we back it all back down because of these higher freight rates, even across the ocean.
Elaine, talk about the crop condition where you're at there in South Dakota, as well as any harvest progress you can share.
Well, I really can't complain. We've had excess rain this summer, which is welcome. After last summer, we had a drought. And I think this is probably true in a lot of areas of North Dakota, too, which, was so dry last summer. So it just seems like every year somebody, draws the short straw. And my heart goes out to the people who are experiencing it in some of the south and western portions of the Corn Belt this year, particularly because prices are so high. At that point, you're going to start looking for a crop insurance payment and a harvest kicker, which may not be as much as we would like, because the rest of the crop in the center of the Corn Belt actually seems to be doing fine.
And Elaine will give you the final word this week. What piece of perhaps risk management advice, or what would you like to leave our viewers with today?
Yeah, it's hard to anchor your expectations of where to sell any old crop if you're in that lucky position of still trying to sell off some of this high-priced old crop grain. It's hard to anchor it day by day when things are flailing up or down 30 cents, 20 cents in any given day. So make your anchor, a goal against your cost of production, or a goal that you would just have in mind as a flat price. Don't worry about the day-to-day movements.